Okay, welcome back from that short break. And remember, we're still busy with human resource activities. Before you went on for break, we were still with induction or orientation, and we looked at the benefits of induction or of orientation. Now we're done with that human resource activity. We are moving on to another human resource activity, which is called placement. Placement, it means placing an employee in a position where the job requirements matches the employee's skills, experience, and job expectation. With the placement of the person in the position, issues such as assignment of workspace, furniture requirements, temporary housing, collecting of outstanding documents, completion of registration forms, and so on need to be addressed. Because remember, placement is very key, because now you are now putting this person where he is supposed to work, sort of at his or her workstation. So that person must actually feel comfortable. And remember, a new person has got expectations. You want to see whether now the person will meet those expectations, because now you have orientated the person. The person is orientated. Now you are placing the person in the right position. The relevant manager must determine the employee's strengths and weaknesses. Very, very important. You know, the strengths and weaknesses of a person have got to be determined by the relevant manager, and describe the specific responsibilities of the person in the position. That responsibility is very, very important by the relevant manager, because now the person, to start working, remember, the person will start working slowly, trying to adapt. The person may make mistakes here and there and so on. So if the position can be wrong, placement can either destroy that person or can either make that person. So placement is very, very key. Of course, all other human resource activities are important, but you can see that, of all of them, they are interdependent. This one leads to the other, and if the other one is not performed well, it may also lead to the other one not being, leading to chaos in the business or an organization. So the relevant manager must determine the strengths and weaknesses of the employee and describe the specific responsibilities of the person. And then lastly, and very, very important, the relevant manager must continue to support the new employee, because what's the point of placing a person and not supporting them? So support is important, because you can imagine, here is this new employee has started working, and it's not being supported. The person may leave, may feel left out. And if you feel left out, that's where now you are going to commit mistakes. So it is important that, these key important tasks that have got to be performed by the relevant manager are performed well in as far as placement is concerned. Done with placement, now we come to remuneration. One way to ensure that staff adopt the business values as their own is to reward them for their effort. Rewarding plays a very important key role in the, in as far as remuneration is concerned, and in as far as making sure that, the staff, they own the values of the institution. Rewarding staff includes both intrinsic and extrinsic rewards. Intrinsic rewards, they include, amongst others, personal growth, responsibility, and interesting work, job freedom, recognition, and so on. And extrinsic rewards, they include, amongst others, rewards such as direct remuneration, such as basic salary, overtime bonuses, and so on. So intrinsic and extrinsic, they are very, very important, in a sense that intrinsic is You know, it has got to do with the employee, him or herself, because it is from within. Extrinsic, it has to do now with the business itself or the employer, him or herself now, you know, giving those rewards to the employee. But they both form part of rewarding an employee. Remuneration must be fair and include the following, which must be explained to the employee: salaries or wages, benefits, fringe benefits, non-monetary benefits, tax and other compulsory deductions. All these, they must be explained to the employee. And still on remuneration, let's have a look at the following aspects. A salary. A salary is a remuneration paid to employees on a monthly basis. So it has got to be clear whether the employee is going to get a salary or a wage. Wage is a remuneration paid to employees on a weekly or daily basis, or sometimes even fortnightly. And then piecemeal is remuneration for a specific piece of work. Once an employee has finished the job, he or she can start a new one. And then time-related remuneration is remuneration according to an agreed hourly rate and not number of units produced. So how an employee is going to be remunerated has got to be clearly and well communicated to the employee. The employee must know. And remember, all this, they also form part of what? Of an employment contract. Must be contained in the employment contract and must be made known to the employee. Now, still with remuneration, there is what we call compulsory deductions. These are the deductions that are compulsory, meaning that whether the employee likes it or not, they are going to be deducted from his or her salary or from her wage or from his wage. For example, UIF, we all know what UIF is. And there, again, UIF, it links with human resource, because remember, Unemployment Insurance Act, which also forms part of recent legislation, it also has got a link and also an impact on human resource, because you are expected as the employer to do what? To also contribute UIF, and the employee will also contribute UIF. Employers must pay unemployment insurance contributions of 2% of the value of each worker's monthly salary. This 2% is basically made up of 1% from the employer and 1% from the employee. It's compulsory. Trade unions, monthly membership fees are deducted from an employee's salary and paid to the trade union. And of course, SARS, here we are referring to personal tax, which is determined by income levels. We all know pay as you earn. You know, the more you earn, the more you pay. This is also a compulsory deduction from the remuneration of the employee. And then you've got what we call fringe benefits. Fringe benefits, they form part of deductions that are basically, they are not compulsory, these ones. What we've seen earlier on are the compulsory deductions, but the fringe benefits, they are not compulsory deductions. They may be there, they may not be there, and it will differ from one organization to the other. Fringe benefits, these are forms of value other than payment, and they are provided to the employees in return for doing their job. And fringe benefits may either be in cash, or they may be non-cash benefits. Cash benefits, fringe benefits, they include, amongst others, car allowance, entertainment allowance, overtime pay, abnormal working conditions allowance, incentive performance bonuses, and so on. All these, they are fringe benefits. And non-cash benefits, they include, amongst others, housing subsidy, housing loan, overseas travel, pension fund, provident fund, medical aid, and so on. But they all form part of fringe benefits.